$600 million. So I would argue that's a pretty poor return on investment. And then the other thing people need to bear in mind.
All right, here we go.
Very heavy level of capex investment is.
Here we go. We got the barbecue chicken.
In 2024, Alibaba's.
We got 2 more plates over here. See that in the bag?
Current financial year is going to be between 3 to 4.
In the bag, we got 2 more plates, and we got plate number 3 here.
And heavy AI capex load.
We got 3 dinner plates. So if one is not enough, then we got a second one, and we got a third one.
And based on our view,
if one is not enough,
the intense level of pricing competition.
This is barbecue chicken.
When you're giving many of these tools to users for free, we're not going to see that monetization.
See, it's got the yellow rice in here.
Yeah, and that pricing competition.
It's got the yellow rice.
Meituan as well, right?
It's got the onions, tomatoes, and lettuce.
Okay, well, if you cast your mind back, they had weak results.
Look at all those raw onions on top. See all those raw onions?
In the magnitude of 60% since.
Look at this. This is the tomato.
So there's been heavy downgrades in terms of estimates, and in fact, Meituan will be loss-making.
You see the
and for year as a whole. Consensus is looking for a rebound into next year. That remains in question.
See that tomato? There's a tomato there.
Driven by cost cutting, but obviously it's a hyper-competitive market in the food delivery and mainstream.
There's a tomato there. There's lettuce underneath.
In China. In addition, Meituan is also investing
there's
in the
yellow rice. See that yellow rice?
Businesses are loss-making at the moment, so that's an initiative.
Look at that yellow rice.
On its bottom line. So I think
plenty of yellow rice.
Trust Alibaba and Meituan. Alibaba at least has a
nice barbecue flavor.
Promise, although given the levels of high competition,
this chicken tastes yummy.
Through subsidies and price cuts.
Yummy chicken.
Alibaba's margin, whereas Meituan
yummy chicken.
It's a more narrowly focused business.
Gotta get some chicken.
Spend in the Gulf, and also a lot of very heavy price competition in the delivery market. I think there's ongoing risk on their estimates.
How
look at that
chicken. Impact and potentially
it's time now is 11.
In order to limit these price wars.
11:10. And now we're going to cap cut this. We're going to make a short of a short of a short.
Impact the software and AI sector.
So now we're going to cut this. We're going to make a short of a short of a short. Okay, you ready? We're going to cut it right now.
Low level of differentiation between these products. So I think
there it's cut.
So
now you see the food.
Supply. So we need to see a consolidation in that.
Now you see the
on a profit footing.
Now you see the street.
Going back to what I said on Alibaba at the moment,
where this restaurant is at. I'm hanging out and eating.
So there is quite literally no monetization.
Hanging out and eating.
Everybody is employing and playing the same game, same strategy, hoping that the weaker hands are going to fall by the wayside. But when you've got dozens of companies, hundreds of companies employing the same strategy in a market flooded with supply, with low level of product differentiation, with a lack of killer apps out there at the moment, it's incredibly hard to see how things will change in the near term. So the government, maybe it does take a firmer hand in trying to engender a sort of shakeout, but really a shakeout and a consolidation is definitely what's needed in the China AI sector to at least give the sector a better prospect of finally at least breaking even, let alone breaking into profit.
Bloomberg Intelligence Senior Analyst Robert Lee, really good to get your insights. Let's actually get more perspective with Sifu as well, China portfolio strategist at Goldman Sachs. See, great to have you with us. We just heard from Robert really the competitive challenges in the Chinese market when it comes to these anti-involution efforts by Beijing still not working on a market that's really driven by a lot of supply and perhaps little differentiation when it comes to products. How much of a challenge will this be for the Chinese market?
Yeah, if we look at the past 5 years, a lot of these involuted sectors have margins significantly below their historical average. So that is still a challenge for many of the upstream sectors. But since this July, we've already seen the policy have emphasized the anti-evolution efforts. So
no trolls are allowed.
Some upstream sector begin to recover a little bit with price stabilize, with some company begin to cut their
no trolls allowed.
Anti-evolution efforts is what we expect to continue driving some margin improvement
No.
of these sectors.
No.
Also boost the earnings of the overall market if the efforts can make some impact.
Yeah, we're expecting Alibaba and Meituan results this week. What are we expecting to see when it comes to that downside pressure from all of the competition?
Yeah, definitely the competition this year have dragged the earnings of these internet companies. As a whole for the MSCI universe, this year we expect 4% earnings growth, mainly because of the competition of the internet space. But looking into the next year, we think it may begin to normalize. The third quarter is what we expect to be the worst quarter.
I get some ice cream after we finish this.
Next year, we think most of the company will have earnings begin
after we finish my first plate, then I'll see if I need another plate because I got 2 more plates on the side. I got a total of 3 plates.
The internet sector will have more normalized earnings. At the same time, we do see AI is boosting earnings from both the CapEx perspective as well as the productivity improvements. So definitely, if we look at the internet sector, not only about the competition, about e-commerce, but at the same time, we also need to consider their potential in terms of AI adoption, how it may contribute to their future earnings growth.
Interesting. Are you already seeing the results of the AI adoption when it comes to productivity in some of these companies? Because so far, we have continued to talk about the incredible investments that this sector is taking and potentially draining some of the cash flow of these big tech giants.
Currently, if we look at AI adoption, we think that mostly investors are considering the upstream investment opportunities that coming from AI capex, which has higher visibility. So far, we've already seen the AI capex of these internet companies pick up, and we also see demand from the semiconductor sectors have also picked up in terms of the stock performance. We've already seen the results. Higher visibility, but on top of that, we also see some development in terms of softwares, in terms of AI-related services. Although some of them are provided for free or the monetization remains a question, but the adoption rate is pretty high in the China market. So that gives us more hope for the future productivity improvements if it's AI applied to different sectors, including like financials, professional services, or other services related sectors. So that is what we have a higher expectation in the future. Definitely productivity improvement will boost earnings.
How positive is it that the Quen app from Alibaba drew already 10 million downloads? Does that give you more optimism about how potentially the monetization of this sector could evolve?
That's the delivery guy. That's the delivery guy that just crossed in front of me.
A little bit early to evaluate the monetization potential. The sector where the AI-related potential is dynamic. We see different emerging like new competitors or like new leaders in the industry. So I think it's still a little bit early for us to give numerical targets. But what we are seeing is a lot of companies are making investment in these areas, and definitely achievements have been made. So that is what we are expecting to boost the earnings of the overall market. Our estimation is the AI adoption in general will boost the earnings of MSCI China by 3% each year in the coming 3 to 5 years.
And see, you mentioned earlier the semiconductor side of things when it comes to this infrastructure build-out. We heard that the Trump administration is considering potentially allowing NVIDIA to sell its H200 chips into China. What does this mean for local makers? Does this apply more downside pressure and competition, or does Beijing not care given that Beijing has given the directive to not rely on U.S. technology?
Definitely, if this is the development, I think it will be welcomed by these like tech companies, because still a lot of them really need like the high-end chips. But at the same time, I don't think it will stop the domestic development in terms of chips, because there are a lot of different demands coming as AI adoption is improving. So if we look at the domestic players, especially the semiconductor ones, we still think they are going to grow their business to meet the different more diversified demand domestically. And from the government perspective, definitely they will continue encouraging all these development. If we look at the 15th five-year plan, clearly technology and security are the top priorities. So I think from that perspective, regulators will continue encouraging all the domestic development.
So good to have you with us. China portfolio strategist at Goldman Sachs with an in-depth look of the Chinese market. Of course, we have plenty of earnings out of China this week. We're also watching the Indian market because we're now hearing that the RBI sold dollars onshore in order to support the rupee coming from traders. Earlier, just a few minutes ago, we had also heard from traders that the RBI was selling dollars offshore in order to support the currency. Of course, we were wondering where the central bank was in the past day after the rupee breached that 89 mark against the dollar. And we failed to see that aggressive intervention that we had seen back in mid-October, and that spurred again another leg lower for the rupee, which tumbled to an all-time low. And we're now hearing from traders that the RBI is selling dollars onshore and offshore in order to support the currency. Still ahead this hour, India and Canada agreed to resume discussions on a bilateral free trade deal in the latest sign of warming tides. Details next. This is Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead. The conversation around your company. Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The news level was premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake fashion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern. Only on Bloomberg. Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
A very good question.
Good question. Great question. I so appreciate that question. You really ask interesting questions.
Bloomberg Television. Top experts, great questions. Earnings season is here.
This earnings season has been much stronger than expected.
Corporations seem to be making money.
Bloomberg is first to break the numbers.
With earnings out of Amazon.
I'm looking at Coinbase.
All right, Doug.
The name of momentum is Alphabet.
A big warm reception to some of these results. With the smartest insight,
we had a tremendous amount of earnings enthusiasm and optimism in that last reporting season. Peak valuations, peak earnings revisions makes me very nervous. We're going to talk more about earnings.
continuing coverage on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Indian Prime Minister Narendra Modi and his Canadian counterpart Mark Carney have agreed to restart trade talks. It's the latest sign of warming relations between the two countries. Bloomberg's Shruti Srivastava joins us from New Delhi. Shruti, so how big of a turnaround is this for diplomatic ties after tensions flared up back in 2023?
So definitely this is a big turnaround. Let's get some context first. So India and Canada have shared a very rocky relationship since 2023, when the then Prime Minister Justin Trudeau, he publicly accused India of orchestrating the killing of a Sikh activist in the Vancouver region. Of course, Prime Minister Narendra Modi's government denied that, and ever since then, both the nations paused their trade talks. There was a lot of diplomatic tensions, and the relationship basically soured. But ever since Prime Minister Mark Carney, he took over in March, he has tried to restore and normalize the diplomatic relationship between the two nations. We have seen that both the nations, they have, restored their envoys in each other's country. And this month, we also saw Foreign Minister Jaishankar, he visited Canada and he spoke to his counterpart, while the Canadian Trade Minister was in India this month itself. And he met his counterpart in New Delhi. So clearly a lot has changed ever since the two shared a rocky relationship. And I believe much of this has to do with the fact that Trump's tariff and trade policies, they have upended the global commerce, and they have left the country scrambling to find, new markets, diversify their exports, and shield their economies from the tariff onslaught, essentially. So this is essentially a big diplomatic, warming of ties between the two nations. With the resumption of trade talks clearly signals that reset in the bilateral relationship.
Yeah, sure. I mean, U.S. tariffs are 50% for Indian exports, really not great. So not surprising that these two countries are trying to get closer together. But how important are they to each other economically?
So let's be very clear. As of now, India and Canada don't have, substantial trade. In 2024, the total bilateral trade that stood at around $24 billion.
This is some great chicken.
And with the free trade agreement that the two sides, they have, announced the resumption of the trade negotiations, they aim to take it to $50 billion by 2050. But this is a huge signal of sorts. How the Trump's policies are essentially putting countries together to come as one force and try and find newer markets, diversify their products. Canada is U.S. second largest trading partner, and for India, the U.S. market, India ships 1/5 of its exports to the U.S. So U.S. is clearly a very important market for both these nations. Now that the U.S. is, it's become uncompetitive for Indian exporters, and U.S. has halted trade talks with Canada, I think it makes sense for both these nations to come and revive trade talks and see how much can they increase their trade, bilaterally.
Bloomberg Shruti Srivastava, good to have you with us, joining us from New Zealand. We continue to watch U.S. futures at the moment after we saw that upside in the Friday session as well, and continuing those gains in the future session early on Monday. This, of course, after the turnaround last week, we heard some more dovish Fed speak, especially from the New York Fed President John Williams, so sometimes is seen as a proxy for Fed Chair Powell. We also had that potentially positive news on NVIDIA being allowed to sell chips to China.
All right. Well, we finished eating one plate. We got two more plates left on the side here.
Credit market. This is Bloomberg.
Now we're going to get some ice cream. We're on the ice cream mission.
Sports update on Bloomberg 1130.
G-Men slipped to 0-7 on the road after a 34-27 letdown in Detroit, while the Jets...
All right, we're on the ice cream mission.
Not a good day for the Nets, losing late in Toronto, 119-109. NHL, though, the Isles beat the Kraken at home. Nothing in the shootout in the baseball trade. Mitchell.
All right, let's go. And
That's your Bloomberg Sports Update. I'm Bushka. Join Bloomberg in San Francisco or online for Bloomberg Tech Presents.
All right, we're rolling. We're rolling. Let's go.
December 10th. Hear from top finance and technology leaders as they strategies, tools, and insights to help small and medium-sized businesses thrive. From mastering digital payments to building companies in a competitive market. Register now at BloombergLive.com/empowering business growth.
Yeah, so we're going to get some dessert now after I finish my nice dinner plate.
Now, your 3-day weather forecast on Bloomberg 1130. Skies will begin to clear out through the evening and overnight hours tonight with breezy conditions and the lows 35 to 40.
Nothing like some ice cream after dinner.
Intact, highs near 50. On Tuesday, showers are possible.
Nothing like some ice cream after dinner.
Showers possible again Wednesday, then becoming partly sunny late afternoon, upper 50s. I'm Hannah Sheehy with your 3-day forecast on Bloomberg 1130.
Oh, yeah.
September payrolls rise.
We're going to the world famous
119.
We did see unemployment
Burger King to get my ice cream.
market right here.
Get that Burger King ice cream.
Insight from the experts. This does keep the possibility of a rate cut definitely on the table. I don't think it's going to change anybody's mind.
I think the Fed can cut in December.
For breaking news.
Look at that. They got the Fruit Loop snowflakes.
Changes every
They got the Fruit Loop snowflakes.
Deep in the European earnings season.
Oh, yeah.
Take a look at how we're doing when it comes to Asian markets.
I got some afterbirth on my throat there.
Up to the minute, global economic news.
What's that afterbirth from?
I'm Lizzie Burton in Florence, Italy.
Ooh, I gotta go down the other block here so I can show you
Global innovators.
the other.
In-depth conversations with the biggest newsmakers on the stage. Top stories.
The other snowflakes. We got the snowflakes ended.
Step-by-step approach, a very systematic approach with India.
So we'll go down this way.
into your portfolio.
We'll go down this way after the light changes, and we'll go around the other way. We'll show you the other decorations that they put up here in New York City. New York City is decorating. They got the Fruit Loop snowflakes, which we just passed, and now you're gonna see the other. You're gonna see the Tinkle Bells. Tinkle Bells. Oh yeah.
Halloween holiday, but the coffee gaining a little bit of ground after.
All right, green light. Here we go.
Seeing some of those earlier gains as well, but we're still
Here we go.
for the Kospi, and the Korean won and the Japanese yen continuing to win.
See how many blocks? Oh, we got to go down another block because this one goes left. We got to go right.
We're seeing the U.S. dollar firm up a little bit in the last few sessions. So intervention watch is very key at the moment, especially in the light of the Indian market. We're tracking Indian markets about 45 minutes into the start of trading already.
Yeah, we got to go to the right there.
Sold dollars onshore and offshore to support the currency. This is according to traders who have been a little bit surprised earlier in the week because policymakers hadn't actually intervened in the market.
Green means go, and now we're going to go to the right to show you those Tinkerbells. Tinkerbells. Oh, you're going to see those Tinkerbells.
From the central bank.
I'm going to see exactly what those decorations are.
In fact, is the tech and financial sectors that are leading the gains. Global investment funds are driving also the boom in India's private credit markets, taking a 68% share of the $9 billion in such deals struck in the 6 months through June. Assured Credit, a Singapore and India-based private credit platform, has announced the first close of its $1 billion fund, raising $520 million, the largest first close ever achieved in India's private credit market. Let's get perspective from Kanchan Jain, head of Assured Credit. Kanchan, great to have you with us. What's driving the exuberance when it comes to private credit in India?
Hi, Shari. Thanks for having me. I think multiple things really.
So many red lights here. On every single corner, there's red lights. Every single corner.
Important role in providing.
That's why it takes so much time to drive in New York City, because you're stopping on every single block.
Very high growth rates, and I think that's one of the key focus areas. And I think our sort of current first close is quite significant in a couple of ways.
I think firstly, we look at Asia credit growing at say 14-15% CAGR, which in itself is attractive. But when you look at what the constituents are, it becomes even more interesting, right? So 5 years ago, Asia credit was.
All right, here we go. Oh, these are the Tinkerbells.
India and Southeast Asia. I think
these are the
today,
Tinkerbells.
Australia and India account for more than half.
And where's those other ones? The other ones that I seen when I looked down the street. I seen the other ones. Let's see here.
Really good regulation, stable regulation for alternative investment funds, good returns, good underlying growth, and I think that's what's driving it. What's interesting also is Asia credit used to be a special fits market till about 10 years back. And I think performing credit strategies, which is what we do, otherwise, don't necessarily promise 20% returns, but mid-dollar returns, lower end for a market like Australia, higher end for a market like India. And I think it's the nuanced view that investors are taking. And I think that's probably one of the most significant things for Asia credit in general.
All right, there you go, the Tinkerbells. See the Tinkerbells?
Opportunities profile and then look at what the return is as opposed to a blanket Asia risk premium applied to everything.
These are the Tinkerbells.
When it comes to India's credit market,
Christmas decorations.
Opportunities when it comes to different sectors at play.
So, of course, I think, credit opportunities.
Red, green, and white. Red, green, and white Tinkerbells.
Because it's about really what sectors are driving.
Man, look how far that goes down. That goes down all the way until the end.
Has been a little bit slow, but outside of that, I think there has been very significant growth. And you're talking sort of more longer term.
All the way until you reach the Atlantic Ocean.
Private capex. Or even the trends, that have come out of tailwinds out of supply chain diversification. So I think all of these are growth areas. There are opportunities around acquisitions, market expansion, and not all of this can be met through bank lending, right? That's a wholesale lending model. So really, for us also, the approach is very much sector agnostic, and I think that's where the opportunity lies as well.
When it comes to acquisition financing, how flexible could these funds be in order to be attractive?
Oh, yeah.
So funds actually play a big role.
Tinkerbell.
Globally, banks do some acquisition finance, but there's always been some kind of central bank restriction on that. We've seen the same in India. There's been a welcome move recently about, the RBI re-looking.
Oh boy, look at this Tinkerbell on a Tinkerbell. 10-mile-an-hour scooter.
Just brings more capital into the system.
Oh, he's got 2 people on that thing. Look at that.
Activity. And there's opportunity for
they're selling Christmas trees already.
In terms of
it's not even Thanksgiving, and they're selling Christmas trees. Do you believe that?
Multiple entities that are involved in typical M&A transactions.
More Christmas trees over here in the outer boroughs than they do inside Manhattan.
Blended capital is actually very important.
I just came out of Manhattan and I didn't see that many Christmas trees.
The warning
they have very, very limited supply in Manhattan because of the space and because of the room.
Are there any of those concerns reflected in the Asian private credit sector as well, and specifically in India?
So no, I think the biggest, important thing about Asia private credit is that it's actually very different from what we see in the US. Right, in the US, the market's largely been led by sponsor lending. So private credit has, been about providing leverage to sponsors or sponsor companies.
Here we go.
In Asia,
going to the famous ice cream spot.
It is non-sponsor market, and performing credit is really providing real growth capex to these companies for growth. And I think it's over and above bank credit, right? It's not going into spaces where bank credit is withdrawing. It's actually meeting, one, a shortage of capital that's there in Asian economies. 2, it's providing a different form of financing that wholesale lending can't provide.
Here we go. Oh, yeah. Burger King, home of the Whopper. Home of the Whopper. We're going to get an ice cream. We're not going to get a Whopper. We're going to get ice cream because we just had my chicken meal.
Things like certain vintages that may result in higher default rates. I think in Asia, and I think if you look at India, you're looking at 1% today, right? So Asian private credit or Indian private credit is about 1.5%. So we are not anywhere near the levels where we need to be concerned. In fact, it's a very big opportunity for Asia, right? We can look at everything that private credit brings to the market, learn a little bit from US experience, build in those guardrails and take advantage of very significant mobilization of capital that can happen for Asian economies.
In that sense, the fact that the private markets are so small, and
Yeah, can I get 2 Hershey Sundae ice creams in the cup?
Much smaller than what we see in the U.S. Is that a risk or an opportunity?
Can I get 2 Hershey Sundaes, the ice creams in the cup?
Or Asian markets, and I think you
That'll be all.
That's a very important point. You know, in the US,
How much is that?
sort of a mid-market EBITDA is $50 to $70 million, and I think all of us know in most economies in Asia, at $50 to $70 million, you're actually looking at a very well-established business, right? So when we look at smaller deal sizes, I think it's to do just with the fact that dollar is better price innovation, businesses, Asian economies, you know, are a slightly different benchmark. Having said that, I think
4:30.
because we
All right, thank you.
transaction prices, there's a way to just create a much more granular portfolio, a more diversified portfolio, and I think that is something that investors, you know, appreciate a lot when they invest in Asia. Not necessarily negative. I think what we need to think about is that you will see a high year-on-year growth rate because you're going from a very low base. That by itself is not a concern. So long as we can address things around bringing good governance practices, look at valuations, bring in transparency and reporting, I think it's a very big opportunity for Asia.
How uniform is that transparency and that credibility across Asian markets? Because all of these countries differ vastly.
So I think Asia is really kind of sticking to it, you know, by creating structures that are based, you know, more foundation to and simple to really immerse.
So 33, right?
And that is a very important part for, you know, for investment businesses. I think within that, there is a fair amount of transparency and reporting that's available in the structures. Similarly, in India, we now have custody structures that people are using to raise offshore capital. Again, I think there's been a huge strides in the last few years. Just as an example, you know, the Indian regulator actually has prescribed and a recommended valuation methodology that all of us as fund managers have to use. That itself is
Can I get spoons and napkins? Thank you.
You know, transparency and investment values. I think individual economies may have some differences, but the move is in the right direction.
Private market players always tout the fact that you can get alternative funding when it comes to the private markets and diversify your investments. But at the same time, when you have risks such as geopolitical risks, when you have fiscal risks across the world as well, and potentially just really black swans that we can't imagine with the ongoing concerns about an AI bubble. How concerned should investors be with the private market transparency and what sort of returns they could get in the next few years?
So I think risks around, you know, geopolitics, just shifting geopolitics, right, all of that, I think these are, you know, incremental risks that we need to factor in. I think pretty much any investment manager needs to be thinking about all of these risks that affect their business. I think we've done the same thing, right?
Oh yeah, so we stopping over here. We're gonna eat my ice cream now. Oh yeah. We got the spoons.
And this may be a pretty general statement, but I think it holds true. That when you look at a lot of uncertainty in the market, the wholesale lending models need a lot more time to adjust to that. Bank lending, for instance, when you're looking at new business models, business disruptions, or tariff-related disruptions, you know, it sort of enters into a little bit of a more, you know, risk-off mode. And I think that creates opportunities for private markets. So done well and done responsibly, private markets in general can take advantage.
Look at this ice cream I got here.
You know, uncertainty.
See this ice cream?
Make better returns and generate good liquidity out of such situations.
Right. Really
Oh, yeah. We got the 2 cups. See that? Not one.
With, of course, I look at the private markets and some of those.
Not one, but 2. We got 2.
Developments on peace talks in Ukraine.
2 cups of ice cream. Look at that.
India says President Trump's proposed deadline to secure Ukraine's support for a U.S.
You see that? That's 2 cups of ice cream.
Isn't set in stone. According to the White House, Ukraine believes that the current U.S.-backed peace proposal reflects its national interests. Rubio's comment comes after US and Ukrainian officials met on Sunday in Geneva, and European leaders discussed Trump's proposal.
Look at all this traffic
of the G20.
Ukraine has never wanted this war, and we will never be an obstacle to peace. Diplomacy has been reinvigorated, and that's good. Very good.
Look at all this traffic.
The outcome will be the right steps. The first priority is a reliable peace, guaranteed security, respect for our people, respect for everyone who gave their lives defending Ukraine against Russia aggression.
Finnish President Alexander says together with Italian leader Giorgia Meloni, he spoke with President Trump about Washington's 28-point peace plan to end Russia's war in Ukraine. Stubb made the comments to Bloomberg's Jennifer Zavasaja on the sidelines of the G20 Leaders Summit.
They hooked it up. They hooked it up with
the plan has 3 levels. Level one, number one,
a
is
nice
Ukraine.
chocolate.
What happens to Ukraine? Land swaps, etc. Then level number 2 is Europe and European security, EU and NATO. And then level number 3 is the transatlantic partnership. So with these things, it takes time. That's why we have our national security advisors in Geneva today, speaking with Foreign Secretary Rubio, with Andrei Yermak and others. So, one day at a time.
Is there anything specific, though, you would like to address first?
No, I think, we work on this as a team. So that's we had 11 countries from the Coalition of the Willing meeting here in Johannesburg yesterday, including Canada and Japan, who are strongly committed in finding a just and lasting peace in Ukraine. And we work on the text together, we negotiate together, and I don't want to lift up any specifics at this stage.
Do you believe this, though, was Europe being sidelined to a certain extent?
Well, I mean, I guess yes and no is the right answer. Yes, in the sense that we hadn't seen the document beforehand, but no, in the sense that now we're negotiating and discussing with our American friends and allies. So I'm not too concerned. I think quite often in these types of negotiations, you need patience. You need to be cool. You need to tone down the emotions. And I guess to a certain extent, be a little bit more Finnish, and then you find a solution. You'll find the finishing line.
But you seem certain that this will not be the final agreement. Why are you so certain about that?
Well, we're here in the G20, right? And here a document was approved. The establishment of that document took months. So it's never the first draft that goes through. You have to do many different iterations. I think it doesn't matter whether you're a lawyer or whether you're in the news business. When you deal with contracts, it takes time.
Does that mean potential discussions with President Trump? You're known to speak to him often. Have you spoken to him this weekend?
Well, now that you ask, 10 minutes ago, Prime Minister Meloni and myself spoke with President Trump.
And what was the progress of those discussions? It's quite early in the U.S.
The President of the United States wakes up very early and he works very hard. And he wanted to talk about the plan and the state of play.
Are there more discussions planned this week? You mentioned Rubio is in Europe right now.
Yeah, I think right now we hand it over to our national security advisors in Geneva and Rubio and the Ukrainian team, and we see what comes out by the end of this evening.
Okay, so it's unlikely then that this Thursday supposed deadline will see a final agreement.
Well, it's difficult. I don't want to sort of preempt that. You never know with these kinds of negotiations. But I think the key right now would be to get a ceasefire.
That was the Finnish President Alexander Stubb speaking with Bloomberg's Jennifer Zavasaja. And here are some of the other top global stories that we're following. Israel says it's killed Hezbollah's military chief in a rare airstrike on Beirut as an almost year-old
this is some great ice cream.
Lebanese government wavers. The IDF says the attack killed Hezbollah's chief of general staff, Abu Ali al-Tabtabai, the militant group's second in command, according to Lebanon's health ministry. The strike left 5 people dead and 28 others injured. Severe flooding across central Vietnam has killed 90 people and left 12 others missing. Vietnam's Ministry of Agriculture and Environment says more than 1,100 homes were damaged and at least 80,000 hectares of rice and crops destroyed. Early estimates put the total economic damage at about $340 million. Coming up, Foxconn's Chairman Yang Liu tells us how the firm is looking to grow its U.S. manufacturing footprint. More details ahead. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. It is at the front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community. Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable. But if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps the global leaders stay ahead. Conversation around your company. Bringing you insights on the people, companies, and trends shaping today's complex economy.
Planning very big things.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
Can't fake fashion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
I didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds treatment. Watch the film No More Secrets and find out how you can get help. Shatterproof.org/finds treatment.
Season is here. This earnings season has been much stronger than expected.
Corporations seem to be making money.
Bloomberg is first to break the numbers.
With earnings out of Amazon.
I'm looking at Coinbase.
All right, Doug.
The name with momentum is Alphabet.
A big warm reception to some of these results.
With the smartest insight.
We had a tremendous amount of earnings enthusiasm and optimism in that last reporting season. Peak valuations, peak earnings revisions makes me very nervous. We're going to talk more about earnings.
Continuing coverage on Bloomberg.
Foxconn is aiming to spend an initial $1 to $5 billion growing its U.S. manufacturing footprint. The expansion is aimed at meeting the needs of AI firms such as NVIDIA and OpenAI.
To keep pushing the frontier, we need to build these new types of AI infrastructure hardware at scale. And I'm excited for that to happen in the US and with Foxconn. Foxconn's experience building complex infrastructure and hardware at massive scale makes them the ideal partner for this. And I'm looking forward to exploring together what this can look like. We'll share insight into emerging hardware across the AI industry, and Foxconn will use that to design and prototype new equipment that can be manufactured in America.
Foxconn Chairman Yang Liu laid out the firm's plans with Bloomberg's Annabelle Jewelers.
A gigawatt per week is the goal.
Okay, 1 gigawatt per week.
1 per week. That will be Sam's goal. We can start with 1 gigawatt per month.
So you think you can add 1 gigawatt per month next year?
Starting next
the second half of the year.
Second half of the year, so you think you can add 6 gigawatts next year?
I'm not sure. It really depends on our study and our new way of doing things. It takes time, but eventually we're going to get there.
Let's talk about then this opportunity in the US, because as you said, part of this is about making America. It's very ambitious. What's the capex that you need to also dedicate to the state?
Capex-wise, it's in maybe 1 to 5 billion to start with, to build the factories, to build R&D centers, but to build the working capital required to build a data center. That's totally different. That requires a huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
Getting back to that $1 to $5 billion capex in the US, what sort of timeline is that spread over?
We want to happen as soon as possible.
And how are you going to finance that?
Foxconn itself is able to finance that.
What are the biggest challenges with scaling up in the US?
Shortage of labor. As I mentioned, it's not the labor cost, it's the shortage of labor.
How do you get around that? What are the conversations like, and what are the biggest shortfalls that you see?
Yeah, we have to work closely with schools and the government, which we were very familiar with when we built factories all over the world. We had to work with local agencies or local government to get their people ready for the kind of job that we require.
On the AI server production assembly side, because today you made that point that you're at 1,000 units a week. When it
1,000 racks.
1,000 racks rather. Yeah, you can assemble 1,000 server racks per week right now. Next year, what does that look like in terms of your target?
I would say more than 50% of increase up to 1,500 to 2,000 racks.
You think you can double it? That's within sight. Are the data centers ready though? Like is the finance
the power,
in place?
The power.
Yeah,
I think the critical thing is the power. Yeah, I think all the data center users, they're all trying to secure power, right? So we found some progress there. Yeah, for our data center users to secure the power. Because I'm running a data center, the data center users will be the one who can use the data center. So they have more say than us to work with the government for the power, because they're the one can commit, not us. You know what I mean? So they will, I think they will work it out.
Their conversations. If your US factories are going to be highly automated, or they are highly automated, can be, do you see them moving other types of production to the US, consumer electronics and then smartphones? Could you shift some production there?
Oh, it's a totally different game. Because as I mentioned, for the servers, their unit cost is so high. The labor cost comparing to it is small percentage, right? But for smartphones, the unit cost is $600. So the labor cost, and also the number of units is much higher. As I mentioned to you, 1 million phones a day. Right?
Global market news changes in an instant, so don't miss a minute. Listen to Bloomberg 1130 anytime, anywhere around the world on the iHeartRadio app. Tune in, the Bloomberg Business app, Sirius XM 121, and the Bloomberg Terminal. Will the Republicans retain the House in 2026?
Is that a question?
Yes, it is.
Well, recently on IBKR Forecast Trader, yes was 30 cents. No was 68. If you're right, you get $1 per contract.
When's the payout?
After the 2026 elections, but you earn an interest-like incentive coupon daily, and you can sell anytime the price works for you.
So if I buy yes at 30 and then later buy no at 10, that's 60 cents profit?
Exactly. $1 back, 40 cents cost, 60 cents profit.
Where do I do this?
At IBKR Forecast Trader. Open an account at ibkr.com/select.
Restrictions apply. Forecast contracts not suitable for all investors.
Equity indices made by committees? That's the old way. The new way is Bloomberg Equity Indices. Transparent indices built on data, not opinion. Discover a vault benchmark for today's equity market. That's Bloomberg.com/equity index subscription.
Now, a sports update on Bloomberg 1130.
Giants blow a late lead and Detroit fall 34-27. They're winless on the road this year, while the Jets dropped in Baltimore 23-10. Sunday night football just finished up the Rams a 34-7 dropping of the Buccaneers, who lost their quarterback Baker Mayfield. Nets, they're dropped in Toronto 119-109. Islanders snuck by the Kraken 1-0 in a shootout at home. And the Mets send Brandon Nimmo to the Rangers for Marcus Semien. It's your Bloomberg Sports Update. I'm Rob Bushka.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Business Week Daily Podcast, a conversation with Christina Cassotis, CEO of the Pittsburgh International Airport, on the opening of a new $1.7 billion terminal and security concerns as the FAA tries to shake off the effects of the recent U.S. government shutdown.
We believe strongly that if you don't get safety and security right, nothing else matters. I do want to point out that in that $1.7 billion worth of build, there was no loss of life. And I say that because when the original airport was built, 3 construction workers lost their lives building it. So having an owner's controlled insurance program, delivering a safety program for the construction while we operated safely and securely was job one every day. Our TSA partners, Customs and Border Protection partners, and air traffic team out here, we have lots of people who helped us in making sure that they had food and diapers and baby formula and stuff that they could help their families with. We had
we ate the chicken
food drive, which we helped support. So
we ate my ice cream.
Care and taking care of our federal partners. We reminded people every day to thank them, and we have had a very good partnership throughout the shutdown as we were getting ready to open, and I think that's a real testament to the dedication that they have.
Hear the full conversation on the latest edition of the Bloomberg Business Week Daily Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. From the financial capital of the world, broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is WBBR New York, Bloomberg 1130.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Optimism continues with stocks rallying as bets grow for an interest rate cut by the Fed next month. Oil in flux as traders weigh the prospect of the Ukraine-Russia peace deal, but Secretary of State Marco Rubio says President Trump's Thursday deadline for Kyiv to back his plan is not set in stone. And Israel kills Hezbollah's second in command in a daylight strike on Beirut. Well, it's just gone at 9 a.m. across the Emirates. I'm Shimona Versace in Dubai. The markets are starting off with a spring in their step this week, so a bit of a turnaround from some of the sentiment, the negative risk-off sentiment that we had towards the end of the week last week. A better close for Wall Street on Friday, however. This time, the optimism is centered around 2 things. Number one, some comments from the Fed's Williams suggesting that a rate cut could still be on the table for December. So that was good news, I guess, for investors. And the second thing is that it seems as though U.S. officials have been discussing the possibility of allowing NVIDIA to export the H200 chip to China. So both of those things set in motion a risk-on session this morning. S&P futures up 0.4%. European markets also looking to open up in the green, up 0.7%. A big week this week in Europe. We've got the UK budget coming up on Wednesday, and of course the backdrop to all of this, geopolitical discussions with the US really putting a lot of pressure on Ukraine now to accept that 28-point proposal for the Russia peace plan. So we'll talk more about that on the show. Gold dipping a little bit today in trading, down 0.5%. It's third day in a row of declines. And then Brent also getting closer and closer to that $60 mark. 62.50 is trading sideways. But I should just say that last week it posted its biggest weekly loss since early October. And again, one of the factors contributing there is that Russia-Ukraine peace deal and what it could mean for Russian production coming online. Switching over our terminal chart today, given it's Thanksgiving week in the U.S., so we're getting into holiday season, I thought it would be good to take a look at how the U.S. consumer picture is actually faring. So the white line is the ETF that tracks consumer discretionary. It's actually done okay this year, but then this was flagged by our colleague Anthony Stevens in Hong Kong. Really interesting to note that what came out of the University of Michigan is people are very concerned about unemployment. Feelings about being employed in the job market are actually pretty subdued at this point in time, which tells you that there is actually a lot of concern about the way this job market is evolving in the U.S. And even consumer sentiment is also sitting at the lowest level since 2020. So some negative sentiments coming through from the consumers. Let's see how this all pans out this week. We obviously have retail sales numbers to watch out for too in the U.S. Okay, let's zoom in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min, give us a sense of how these markets are responding to the more upbeat tone that's coming through from U.S. futures.
That's right, Jumana. We had the bulls coming out to take charge once again this morning after the very volatile week last week. And as you said, there are a couple of factors at play. The repricing of the Fed rate cut in December now back on the table. And then there is the scoop about how the U.S. is considering the sale of these H200 chips to China. So that's providing a tailwind for stocks. Nikkei futures because Japan markets are shut for the holiday, but already now you can see the Kospi paring back earlier gains, and it shows you that the risk sentiment is looking a little bit fragile here. But you flip over and take a look at some of the chip stocks again because of that scoop about the H200 chips. And yes, we can see SK Hynix and Samsung looking still in the green, giving up some of the earlier gains, but still in the green. But TSMC looking unchanged at the moment. But what's different though is the Chinese stocks are reacting quite differently here. We are seeing steep declines, down about 10% for Hua Hong Semi, 5.7% lower for SMSIC because the H200 chip sale, while it is good for the AI
roaming around,
at the same time, it's bad for that domestic substitution theme, right? So some of these local domestic chip makers not doing so well today. Jumana.
Min, thank you so much. That was Min Lo in Hong Kong. Well, as Min was just describing, the stocks have been gaining in Asia today, extending the optimistic end to the week seen in U.S. markets. Investors seeing an increased chance of a near-term rate cut from the Fed.
I view monetary policy as being modestly restrictive, although somewhat less so than before our recent actions. Therefore, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral, thereby maintaining the balance between the achievement of our two.
Garfield Reynolds, who leads our MLive Asia coverage, joins us now from Sydney. Garfield, it's pretty amazing to see how one comment from a Fed policymaker can move the market so much. I guess now we're back in the camp of maybe a rate cut is still on the table for December?
Yeah, I think so. There's also, to me, it was a little bit weird that the market had moved so decisively to price a low chance of a rate cut because amid all the uncertainty, it was clear that there were concerns about the labor market and the slide in equities and other assets was starting to send the sort of signals that traditionally the Fed has responded to. So amid all of those doubts, it was, I always felt like a coin toss was the minimum you should be betting on. Now with Williams, and he's an important member of the FOMC,
or wrongly, many regard him as being quite close to Jerome Powell, and therefore what he said in the absence of any comments recently from Jerome Powell was taken as signaling this is how Powell is thinking. And while the Fed is clearly pretty divided at the moment, you would think if Powell and Williams were to come down and say, yes, we should cut rates, that's going to be enough to get a rate cut over the line. So that helps to explain, why there's such a strong move in response to this. I think it's also because the move had become so grim, it was getting a little bit overstretched to the downside. Buy the dip has been such a rewarding strategy for so long that this then provided a concrete reason for people who wanted to buy the dip to come in and buy the dip.
Yeah, and we're heading into quite a big week as far as the consumer is concerned in the U.S. We've got retail sales, Thanksgiving week coming up, always a good test for consumer spending and how things are evolving there. How much of a catalyst do you think that could be for this continued momentum in U.S. stocks?
Yeah, I see that as the other potential catalyst that we've got come through. Most of the time, the Thanksgiving period, Black Friday sales, which these days seem to start about November 1 and go through to about December 10. But be that as it may, this is when it really gets on everybody's radar. Usually they somehow make to beat expectations on it. It gets people excited about consumer the debt, resilience, about consumer spending. So there's a decent chance that we get some data that helps to further revive sentiment. We'll also get some actual data from the government on retail spending, although that's, I think, from back in September, that's a bit dated. All the same, we're going to get more of a picture on what's going on with the consumer, how well, therefore, the U.S. economy is holding up. And it's a potential win-win for stocks, because if it shows that the consumer remains resilient, well, that's good for stocks. If it shows the consumer is falling out of bed, I would expect those rate cut bets to jump to about 100%. That might well be a bad news is good news for stocks moment. The sting in the tail would be if the news is really bad, so bad that even a single rate cut in December, shockingly, would not be enough to turn things around.
Yeah, thanks for breaking it down for us. Garfield Reynolds, really good to have you with us on the show today. Coming up, BHP has ended another last-ditch effort to buy Anglo American and bolster its dominance in copper. We'll bring you the latest on the on-off mining sector saga. That's next. This is Bloomberg.
Bringing you up-to-the-minute aerospace news whenever